Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome, Auvorians, to Midweek Software Strategy Session. My name is Steve Vetterl. Today is the 12th of October. Happy beginning to fourth quarter for all. By the way, today, if you guys get this recording today, it's Chris Simonian's birthday, so you might want to pop into the AP social platform. Wish our fearless leader a happy birthday. But as you can see, I'm in the news feed right now. So what I do wanted to bring up is a note I actually put out. You guys can read if you are active in the news feed, which I highly suggest you do. The problems in China are not talked about much. And this really probably isn't a surprise to anybody, but there is some reverberations going on in this country that could lead to ripples, if you will, across other capital markets. In the past, and this would be when a lot of this happened a couple of different times over the last 3 or 4 decades, there was barely a ripple on our shores, or even the shores of Europe for that matter. I think the concern I have is that, as I mentioned here, China is essentially a gigantic player now. So there's a lot more economic issues and certainly disruptions if this was to continue to turn into, like a big old financial crisis, which quite frankly it almost already has approached. That is, will it disrupt the flow of goods to other countries? That's a big unknown at this point. I could be completely off key in my analysis on this. And ultimately, the role of any risk manager is to potentially prepare for problems, right? In any form. So with looking at a lot of this different stuff, I think the key thing is just understand that it could be a problem. Maybe that'll alert more of our traders and developers and some of our other subscribers in different areas of trading to just be a little more aware. And if that can ultimately help you lose less money or make more, then I've done my job. So just take a look at the story here and so forth. It's going to be a short session today. I've gone over a lot of this stuff in ad nauseum detail over the last couple of months. So you could certainly look back at the recordings, but in any case, I try to remove everything but red folder events and just make sure we're working on the current week. So yesterday was a bank holiday, sort of a strange day because it's a day where there's a banking holiday, but the credit markets were closed, but the equity markets were open, and so were the Forex markets. So a little bit stranger, but in terms of movement today, let's go back and check to see. Just looking at the equity markets bounces. All right, so back to the calendar. Tomorrow, everybody's got to keep an eye on this inflation. It's continuing to be a theme. FOMC minutes, they'll probably make some statement that'll completely disrupt the marketplace that is something like the following: well, we don't see, or we see transitory inflation curtailing, right? They kind of have to say that because if they were to agree that inflation's getting ugly, they've got to make a policy change and a stance that is other than quantitative easing or some sort of tapering of that easing. It's just going to pull supply off the marketplace, and it's going to create some air pockets for us to continue to trade and roll low into. But, maybe by some off chance, inflation starts to wane a bit, right? But everything from energy to certainly prices of many raw materials in construction, to, I mean, even the transportation of uh, all kinds of goods and services has been disrupted. I think the problem I see, which more has a laziness connotation to it, is that, like the U.S. Postal Service is a great example. You have, I mean, obviously there's labor shortages. It's going to lead most of these organizations to say something like the following: well, we've tried hard to find employees, and um, we're just having disruptions in the labor force. And whereas I just think that it's companies just use an excuse to, downplay any expectations for the consumer, right? At some point, that's going to backfire on certain organizations. So, you know, there's just a lot of how should I put it? The reality that is being communicated to global citizens from governments and central banks, in my opinion, has been fogged, right? So the pilot issue with the airplanes has nothing to do with delays and outages. It is a sick out by employees that do not want to get vaccinated, right? First Amendment. So always pay attention to the underlying core theme of any news release or whatever the sources of the news, because half of the stuff that's communicated to us, maybe more, is all BS. I'm always trying to look under the carpet. I don't pay a lot of attention to news that is disseminated, especially through some of the more terrible sources on this planet. And I think you guys all know what I'm talking about. So, and there is risk in that, trust me. So I mention it quite often. Let's go back to charts. Quick one on the DXY. I don't know if you saw any of my presentations from Saturday or last Tuesday, but I was expecting this to be a tight pullback and for us to go up and make new highs, which we're doing. So consequently, accepting any kind of short the US dollar in any currency form, in terms of its relationship to other pairs, you do at your own peril. Because I really would have rather been long the dollar in our very short term thinking. Long term, I still think this thing's going to 85. But for now, is poor of a situation. Um, and I certainly see that maybe some of the reason it's rallying is the fact they can't seem to come to um, any kind of agreement in DC about this internal package, which is valued at about $3.5 trillion. It's just a nutty number. Maybe there's a little bit of sort of light at the end of the tunnel on that, because if the Democrats can't get the package passed in the next, I don't know, 6 to 8 months, we're coming up on 22 term elections. It's going to take front and center news, and they won't be able to get the package passed. Ideally, whether citizens of the United States understand this or not, there would be a lot of benefit, in my opinion, to not getting that package passed, because it's just going to add to a lot of levels of debt. So typically that is an underlying drag, if you will, on any company, or any company, yeah, probably any company too, right? But any country's currency, when you have a much higher levels of debt, right? So we'll just leave it at that, because I've been kind of a broken record. Now let's go down to Euro USD. Okay, so hanging on the edge of the cliff. You could even argue we've begun to fall off the cliff. And this 116.30 area was resistance, and now we're back down a little more than 1,000 pips off of that move lower. See that? So we're probably going to go into this air pocket down there, and I have no idea. I would imagine 1450, the 1450 area is probably going to hold us for a period of time. This is a big area of sort of the bottom of the pocket, if you will. Moving on to the pound. This is still looking a little bit better. Notice it really is resisting against. Let's see if I can make this screen larger. These yellow lines really do prove to be pretty good. There's actually a bunch of other stuff lining up right here, but this whole 3670-ish area has really posed a pretty solid ceiling at this point. We've come up against this little region 6 times now. Is that right? And it either held us, but once we blew through it, which by the way was on volume, just note always the importance of some sort of move through an area where you have a much higher big volume. But it doesn't seem to me that, even though this is probably just a, sort of an outsider liquidating type of event, we've now are against resistance here at this whole 3650 area. So for now, that would be my ceiling, and the floor being what was it, 7 days ago? Well, this is the low on the 29th. Would be my zone for the bottom. Could bounce between these two areas. Again, this is all going to hinge off of any pin action that started with the first pin, which is DXY. USD CAD still inside the zone. JPY, note a little bit of a teaching lesson on this here, because I often get asked over the years of students, well, you spend a lot of time talking about balancing areas and the length of, right, or the width, if you will, if you're looking at it on a chart, but the length of time that you spend in a particular region. The longer that is, the more there is a chance for a potential breakout, right? And if it does break one way or the other, the key is you want it to come back down and settle. So the bears, we have had obviously good dollar movement, but notice that they just completely woken up this currency, right? Now, I don't know, maybe a piece of the pin action off of this is the fact there is some craziness going on in China, right? Japan's right around the corner, right? They could absolutely be disrupted. So this may be a little bit more of a tell, right? Or at least helping us to understand that there is a bigger impact to a lot of the real estate stuff that's falling apart in China. So I talked about this. It looks like there's a few people joined us late. I actually posted a whole client review to clients about this, and just, I hope I'm wrong on that post. I really do. I hope there's no waves, because we're already battling enough inflationary things in almost everybody's everyday life, right? What else? One, two. Yeah, we're not. We're not one time framing up, but I still think this doji right here was your absolute clue, especially since the dollar held at almost the same level on the DXY chart right here, that we were going to rip. This has just been probably a lot of long-term shorts that are just getting barbecued right here. Why on earth you'd have any long-term position short the US dollar? Maybe you could because you're longer term, obviously, but the charts are just showing that it's going to go up and fill some of these pockets of, I can almost guarantee you there's a ton of stops up here. If there wasn't, we wouldn't have just bolted through the whole thing and run the entire profile, because now we're way up here in nosebleed section, if you will. So you have to drop back to the weekly chart. So, not as important if you're not trading the yen, which most aren't, but I think it's always important to recognize these chart patterns because they'll show up on almost any instrument out there that's traded. Dollar Swiss, the daily chart first. Still tight range, tight zone. AUD USD, not as easy to sort of see what's up here, but just basing along this, I really would have expected this to be weaker, honestly. And a lot of that, I think, is really just my thoughts on what's going on in Australia. I mean, the government's really just sort of taking over the people, it's just turning into like a totalitarian society, and or the problems in China could really affect this country. You know, again, I hope I'm wrong about all this, but we certainly feel for the Australian citizens. Hearts go out to you guys. It's been pretty brutal for you. CAD CHF, again, finally getting toward that point where we were on 12th of May and 1st of April. So it was almost like April Fool's high. See that? We're getting back to that point again. It'd be real interesting to see what we get at this point. Obviously, Canadian currency has been strong in relation to a lot of stuff. So weakness in the yen from a dollar perspective is absolutely panning out into the highest move we've seen in the Canadian dollar's value relative to the yen in quite a while. Like a real while. See this? All the way back to 2015 since price has been up here sniffing around at these highs. Once in 18, once late in, well, once in the third quarter 17, and we're here again. So we get above this, we could just absolutely just have a parabolic move, or what I like to call a zipper, where you just run through an area. I think a lot of other things, unfortunately, need to fall in place for that type of prognostication to play out in this currency, but at least it keeps you guys on alert. Euro GBP, real tight here. Obviously, Euro's been weaker than the pound, no surprise. Almost everything's been stronger against the yen, and I think a lot of that has to do with just spillover currently. See how the euro's weaker against Canadian, no surprise. Make sure we take a look at the daily charts on those. See this one time framing down action here. Strength in CAD. GBP CAD is a neo currency. This is a clear break and test on higher volume that has led to movements lower. Lower lows, lower highs each day. Not one time framing because it has to be outside each candle in order for that. But the question I've always got on one time framing, it just denotes a much stronger level of movement by other time frame players from a breakout in a particular zone. So you want to take more note, right? Take note from multiple dojis that show up, or indecision candles, if you will, at a particular level. Let's see what else. Gold, actually GBP NZD, still inside the range. AUD NZD, this one just baffles me, I gotta tell you. I don't trade it. Yeah, I think I've touched on every currency I want. Let's take a quick peek at gold. I'm like a long-term looking chart guy with this. I just like to see the whole move. This is just the spot market, but you can use GLD if you want. This is a very heavily traded ETF that has active and quality volume that is aggregated here. So you can use it as a decent analysis tool for understanding the entire movement from a volume perspective. But you really only care about looking at volume in the totality, in its just, let me put it a different way. You only care about the volume that is on the entire balance area, right? So we don't care about this volume down here because we're not in that zone. We're in this upper zone. So you only care about the volume that shows up. So I always try and take the first candle against, you can do this by date too if you want. So you can always take like the first candle here. This is the 6th of April and just key it right in. It starts from the 6th of April to current. Why does it show 224? Let's go to the 6th of April. So Why do I talk about market profile all the time? We'll look at this chart. It's a great example. We have been holding a lot. Keep in mind, we're weekly here. So we've been holding for months at this red line. This whole 1620-ish an ounce area has been a bounce level. Why? It's the center point of all volume that's executed in the aggregate over the last year and a half. So that's an important point to look at from a technical analysis standpoint. And if you dial the chart in right, ideally it can be kind of confusing to get this dialed in, but you just select the first day of the movement up into a new zone, and then obviously consequently collect all the other single day, or in this case, single weekly candles for a particular zone. You can use it as an analysis from a volume perspective. And it's just been spot on to where we've seen bounces. Came below it a little bit. Long-term moving average, the yellow line here, bounced us. So what does this mean from somebody that's long gold's perspective or heavily long gold? You really don't want it to close underneath this area, period. All right, take a quick look at, by the way, here's the absolute carnage in silver. Doesn't seem like much, but this thing's dropped a lot. Hanging on the edge of the cliff here. Take a look at oil. Up near the highs, no surprise, of multi-year highs. Go down and look at coinage. This chart's actually surprised me. Let's drop back to daily so we can just see the whole movement of this year, which is mostly what I care about. Started off right in December. I would have expected, and here's where you can always be wrong, right? I would have expected this area to hold pretty solid on this move up, and we just zippered above it. So unfortunately, with this coinage, the typical technical analysis that one does, whether it be candlesticks, price action, moving averages, any kind of stretched movements like this Bollinger Band or any kind of Keltner-Janin analysis or standard deviation, nothing more than just ways to measure the stretch of the rubber band, or market profile or volume or any kind of time-based technical analysis. It's not working that well on this, right? So, I mean, there's been a lot of areas that, frankly, I've just been wrong. So when the more one is wrong about a normal read, and I'm pretty good on gauging reads in other areas, tells me you just can't trust the technical analysis to this degree, right? Why is that important? What if you have a large position in Bitcoin and maybe you've bought from below, right? You're going to base a lot of your movements on other factors that affect price, right? Somebody out there showing it, some comment from Musk, right? I mean, there's all kinds of international concerns one can have on both good and bad to this. So that becomes a much more difficult price to project or to do any kind of forecasting on. So from a risk management standpoint, what does that mean? That means that I just don't have that large of a position, something like this, right? You won't hear that hold on for dear life statement coming from me, just because at some point, if I am right and a lot of the other, I should say, non-coinage folks that are very smart people are right, the absolute day of reckoning is going to come for this area, right? And among that carnage that takes place, which will ruin a lot of big people as it did in the past, there will be some sifting through the rubble, if you will, that I do, just like I did in this coin last summer. So it's ideal. I should have held it more, but basically around this time last year, we had a big movement up into a higher area. You should get a look at this on a weekly to see it. Get out a little. But I mean, really, like into the whole pandemic, March of last year to pick this up for somewhere in the area of 5K a coin. I mean, that really was the place to buy. That would be the place to buy again, in my point, because you can see it's a long-term support area. Maybe we get down there again. Maybe I'm wrong and it goes much higher, right? So you got to weigh all your options. Let's see. That's pretty much it. That's all I wanted to go through. So I will wish everybody a good week. May the trades be with you. Be kind to each other. Don't listen to all the BS in the media. Have a great week.